US, allow tech giants to opt out of new global tax scheme, or face tariffs. Japan doesn't like that one bit. U.S. Treasury Secretary Stephen Mnuchin warned G20 members of retaliatory tariffs should negotiations for a global tax on tech giants fail, Reuters reports. We've been very consistent in saying we think the digital services tax is discriminatory in nature against digital companies, and specifically a handful of U.S. companies, Mnuchin told reporters attending a G20 meeting in Saudi Arabia on Sunday. The president was clear that we were proceeding with reciprocal tariffs. The Organization for Economic Cooperation and Development, OECD, which is in charge of international tax discussions like these, has floated new rules to force major players in tech, Apple, Amazon, et al., to pay taxes in the countries in which they do business. Read, here's how much money you made Google by staring at its ads for 20 years. It's a move that most finance leaders of major economies in the G20 support, a global effort to make it more difficult for companies to shift profits and tax-paying responsibilities to subsidiaries in havens like Ireland and Luxembourg, while increasing tax transparency across the board. The US, however, doesn't share that view. It stymied the process last year by proposing a safe harbor so that companies like Google could opt out of any incoming global tax, much to the dissatisfaction of other G20 members. U.S. proposal of a safe harbor from global tax draws flack. Japan's Finance Minister Taro Aso criticized the safe harbor plan on Sunday, noting it would severely undermine the regulatory efforts of the OECD. Almost in unison, France's Bruno Le Maire stressed the need for resolution by the end of 2020, or else a patchwork of different tax systems would emerge that would be difficult to navigate. France announced in January it would delay a 3% tax on profits made locally by big tech companies, at least until G20 nations reach consensus. The US had previously threatened France with 100% tariffs on French exports like leather goods and wine should its tax come into effect. Austria, Turkey, Italy, and the UK have each proposed their own. For more on this story, visit the news article link.